Okay, hello everyone. Welcome again to another Collateral onboarding call from MakerDAO. Today's Wednesday, October 14th of 2020. And the two projects that we have today, it's Ren. So we have Long from Australia, and we also have Hayden from Uniswap. And well, there's also a bunch of people from their team joining us as well. Thank you all for coming. The dynamic is quite free, but in general, we have a 10-minute presentation where the project can discuss different things, and then we allow for 20 minutes for Q&A and discussion. And again, it doesn't need to be very precise, but yeah, that's pretty much what we're trying to achieve. You're welcome to break the rules. So Long, if you're ready to start, I don't know if you want to share screen or you just want to.
Yeah, I'll just share my camera so people can see me. But yeah, no, I don't have any screen presentations.
Okay. Yeah, don't worry.
Yeah. So hi everyone. Thanks for joining. My name is Long. I'm the Chief Technology Officer at Ren. So I thought I'd give a bit of an overview of what RenVM is, which is, I guess, what we call the main network that we're building at the Ren project. And so I think today we're looking at onboarding for the Ren token itself, as well as Ren BTC, Ren Bitcoin Cash, and Ren Zcash. Now the Ren token and the Ren Ren wrapping tokens work very differently, but all the wrapping tokens work the same. So I guess I'll cover them all. I'll talk specifically about Bitcoin because I think that's the one that is the most interesting. But yeah, Bitcoin Cash, Zcash, and the future assets that we look at bringing in the future will all work in the same way. So yeah, what RenVM is all about is interoperability. So the goal is to bring Bitcoin to the Ethereum network and to other networks, and to also bring assets from Ethereum over to other networks. So in the particular context of MakerDAO, why we think this is valuable is the ability to bring Bitcoin over to Ethereum and use as collateral in the MakerDAO system, which should help grow the amount of DAI that can be minted and sort of diversify the underlying collateral types. So the way that RenVM does this is the network accepts Bitcoin from users, and for every Bitcoin that it accepts, it mints a one-to-one value representation called Ren BTC. So it mints this Ren BTC, and then any point a user can burn that Ren BTC in order to do one of two things. They can either send it to another chain, or they can just redeem the underlying Bitcoin itself on the Bitcoin chain. And so, the way that RenVM accepts this Bitcoin is that it's a multi-party computation network. So what it does is it generates private keys in a way that no one ever sees the private key, and everyone has sort of these little shares of the key. So in effect, what it does is it basically creates a big multi-sig that can have an arbitrary amount of participants, but to the underlying networks, it just looks like one signature. So if you look at RenVM today and you look at the private key that it's currently holding the assets in, it appears to just be one private key, but in actual fact, it's multiple private keys that are shared up amongst multiple nodes. And they sort of simulate a multi-sig environment. So from purposes of thinking about it, I think there's a bit of feedback from someone. Michael, would you be able to mute? Okay, that's better. Yeah, so for I guess the best way to think about it in terms of understanding the end result is that it is essentially a 1 out of 3 multi-sig, and we sort of scale that up to lots of 100 nodes, and we break down the value between those nodes, and then we shuffle that value over time. In return for this, the network takes a small fee from the, or it can be a large fee, depends on the current state of the system, but it takes a fee from the assets that are moving across the chain. So if you move Bitcoin from the Bitcoin chain to Ethereum, then RenVM will take currently 10 bips of Bitcoin in order to secure itself and incentivize its participants. So that brings us to the participants, and this is sort of where Ren comes into it. So these participants operate in sort of this off-chain environment where they're performing this multi-party computation, but also performing consensus algorithms so that they can sort of agree about how to shard, how to change shards, which Bitcoin transactions to process in which order, all of the stuff that you typically would want from a consensus algorithm. And to participate in this, they have to put up a stake of 100,000 REN tokens. So the REN token is sort of the underlying work token that the system uses to decide who and who cannot be a participant of the network. So today we have about 1,350 nodes online that are being operated, with another, I think it's about 30 coming online at the end of this epoch, which is sort of the interval at which we break the system down into. And yeah, generally we see that spike just before the end of the epoch as well. So that's, I guess, a very high level overview of how RenVM works and how it brings, well, I guess what it's for. Did anyone have any questions? Otherwise, I can sort of dig a little deeper into some of the aspects that I think are interesting or important.
I guess you can go ahead, Long.
Cool. Yeah. So some of the things that I think are particularly interesting here that make RenVM a little bit unique is the MPC protocol that we use is one that we extended from some seminal works back in the late 90s. And so our focus for this has been to allow this network to operate under sort of what you might call standard blockchain conditions. So in most blockchains, the threshold for an attack of some kind is 33%. So whether that's through selfish mining to do a double spend, or whether that's through a direct PBFT voting system where the nodes are voting on consensus directly, usually the threshold there is 1/3 as well. So we've taken that same sort of mentality. The consensus algorithm that our nodes work is the Tendermint consensus algorithm. We don't use the Tendermint implementation. We've modified it slightly for to be more efficient and more effective for the specific purpose that we're using it, although it has been audited multiple times. And it's been live, running for 6 months. And the MPC algorithm that we built meets the same assumptions. So we could, in theory, you can have an MPC algorithm that goes to 50% or 2/3, but if your consensus algorithm is 1/3, then there's not much point doing that. But one of the things that's unique about our MPC algorithm is that it has a property called robustness, which means that up to 1/3 of those machines can go offline at any point throughout the computation. And this is pretty unique for modern MPC algorithms, which typically focus on trying to get the collusion threshold as high as possible. So past 1/3 all the way up to 100%. But the trade-off that those MPC algorithms make is that if a single node goes offline, the computation fails. And you either have to engage in a system to try and figure out whose fault it was, or you just have to assume that it was everyone's fault. And this, I think, creates poor economic incentives for the participants. So by allowing the participants to go offline partially, this I think this creates better incentives and acknowledges sort of the sporadic environment of globally distributed internet. And an interesting, very recent example of this is actually, I think, the Sao Paulo data center in AWS went off recently, a few days ago, went offline for, I think, an hour. And one of our nodes was in that data center. And obviously it's not our fault or the fault of any users who might be operating nodes if their machine does happen to be in a data center that goes offline for a short amount of time. And the network operated fine without any issues, and no slashing occurred or anything like this. And so that's, I guess, representative of the network functioning as intended. So we've been running this for 6 months now, or just shy. I think in a week or two, it'll be 6 months. And the way that we're rolling RenVM out is obviously quite a complicated network, and there's a lot of moving parts to it. It's at least as complicated as a normal blockchain, plus it has all this MPC stuff. And so we're taking sort of a staged approach to how we want to roll this out. So the staging is broken up into 3. We have the sub-zero phase, which is the phase that we're in right now. We have the phase 0, and then we have phase 1. So phase sub-zero is where we progress from a stage where we're running all the nodes to a point where we have several projects that are naturally incentivized to behave because they use RenVM and all of its underlying assets. So this includes groups like Polychain, Infinite Capital, Curve Finance, which is where I think 80% of the RenBTC sits right now. And then phase 1 is where we progress from, phase sub-zero is where we progress from having that small group running the system to having the whole community running the system. And then from phase 1 and onwards is kind of where we say the system is fully decentralized, all the governance kicks in, and there's no, I guess there's no small group that has any special privileges within the system. And so, we plan to progress through that phasing as slowly as we need to make sure that the system is secure. So if there are any issues along the way, that way we're able to sort of coordinate a response just in case something goes wrong. For example, something that we've done a couple of times now is there's been a few instances where users have misunderstood how to use the system, and we've been able to sort of help them recover those funds. I mean, that's something that's obviously much harder to do, even with a small group of people helping maintain the system, and impossible to do when the system is running at full scale and involves everybody. That's pretty much everything I wanted to talk about to introduce, I guess, Ren and how it works. Did anyone have any questions?
I had a question. What do you foresee as sort of the upper bounds on the Ren BTC supply? Like, what's going to kind of constrain that if, say, there's 10% of the of Bitcoin wants to go onto Ethereum? What's going to be the bottleneck on that, do you foresee?
Yeah, so the two main bottlenecks are going to be the amount of Ren that's bonded and the amount of fees that people are willing to pay to have their Bitcoin sitting on Ethereum. So the way that RenVM, so it has a few economic levers. The two most important ones are the minting and burning fees. So every time someone moves an asset to a chain and every time someone moves an asset off a chain. If you move an asset between two chains, then you pay both the burning and minting, burning on one and minting on the other. And the idea is that as the amount of Bitcoin grows, so too does the minting fee. So we sort of think about, I guess, the equivalent of gas bandwidth in our system is the amount of value that's locked up. So as that value increases, so too does the minting fee. And it gets to a point where the minting fee then becomes used as a rebate as well. So that a portion of that burning fee gets taken and used as a rebate to repay people who are burning, so that fee actually becomes negative. And that encourages a flow of Bitcoin back out of the system. So really it depends on the kind of yield that people are generating, whether they're willing to take a rebate or not, or whether, in an extreme scenario where the minting fee has risen all the way to 10%, whether they feel like it's still worth sort of minting Ren BTC at that kind of fee. We would obviously anticipate that by the time we get to that stage, no one would be willing to mint it at those kind of fees, which is the purpose of raising the fee in that way.
Right. So would you say that like the Ren locked has to be sort of comparable to the amount of Bitcoin moving through it, like in terms of market cap?
Yeah, that's right. So one of the things that has to happen before we move on to before we reach phase 1 is to be able to bring the value of Ren in the system approximately equal to the value of BTC. And so that is the goal of raising the fees, is to sort of slow down the amount of value that can come in and raise the yield that's being generated by the nodes, and therefore bring in more Ren. And if all the Ren is locked up, then in principle raise the price of the asset itself. The actual price of the asset is not particularly interesting. The more interesting thing is the value of the bond in the network. So in essence, the amount of yield that's being generated. What we're seeing is the nodes at this stage of the network seems to be reasonably happy with a yield of around 3 to 4% per annum, because they're earning Bitcoin itself, not earning governance tokens or something like this. So now that we've seen that number, the next step for us is to start implementing these raising minting fees and burning rebate fees, and use that to watch, I guess, the network come to equilibrium.
Makes sense. Thank you.
Does anyone have any other question? Okay, I'll shoot one long. Can you briefly touch on maybe it's a little bit off topic, but can you briefly touch on how to contribute to the network and how to participate with the node?
Yeah, sure. So if you want to contribute to the network, you can acquire 100,000 Ren and then bond that to the system and run a node. There's an epoch at which everything happens an interval at which everything happens, which we call an epoch. Presently, it's set to 1 month, but we're looking at lowering that to 1 day. And that's the epoch at which new nodes get admitted into the system. So you sort of register your node and get ready to participate. And then at the end of the epoch, it actually will get admitted and start doing work. And that's why we typically see a sharp rise in the number of registered nodes right before the end of the epoch, because there's not much point registering before that. Then when you deregister, you have to wait for 2 full epochs. So if you deregister at the beginning of an epoch, then you have to wait for almost 3. So you can have to wait up to 3 epochs. When we bring the epoch time down to 1 day, that will get extended out so that the deregistration timeframe is the same. The purpose of that is several-fold. The first is to disincentivize people from deregistering too quickly. So for example, earning a bunch of fees from a sudden big mint that's happening and then deregistering straight away. And so that keeps the numbers of nodes in the network stable, changing as little as possible. And the second is if there is bad behavior and the nodes do need to be slashed, if they attempted to fork the consensus or something like this, this gives an opportunity, a long enough opportunity for everyone to notice that and to do something about it. Even if there's like a bug in the slashing mechanism and that node's not correctly punished, we think that 12 weeks is a sufficient amount of time for the technical team to come in and make that change. So if you're interested in helping power the network, you can acquire 100,000 Ren and run one of these. We call them dark nodes.
Nice.
Yeah, I got a question, Juan, real quick. So I like to think of Ren BTC, and don't take any offense to this, but initially similar to what BitGo and WBTC have done, which is obviously they're centralized. I guess what I'm asking is, can you explain to the maker community what was your thinking behind being a custodian right now? Not completely decentralized, right? I think you described it as phase 0 going into phase 1, if I understood you correctly. That would be the first part of my question. The second part is, long term, what do you think is the outlook of Bitcoin on DeFi? Not just on Ethereum, but also on other layer 1s and possibly even layer 2s. So it's like a 2-part question there.
Sure, yeah. So the initial reason is that when any new network comes online, obviously there's security trade-offs between being centralized and decentralized in general. Some go one way, some go the other. At the beginning of the life of a network, centralization can be more secure than decentralization, especially in a highly complex network. We've seen a few examples of this already over the past year, even. So things like YAM, for example, going straight for decentralization, which is an admirable thing, but then very quickly realizing there's a bug and requiring a high level of decentralized coordination, and even then being unable to actually instrument the change that was necessary and ultimately collapsing the system. That exact kind of scenario is what we want to avoid. And obviously we've done the best that we can, and we've undergone audits and all this kind of stuff. But as everyone knows in this system, that's not enough. So by giving us a long lead time with central control over the system in this first sub-zero phase, where we can do 2 things. One is that if something does go wrong, we have a very fast and capable ability to react, whether that's to instrument a quick patch to the system and deploy that to our nodes, because our nodes are the only ones that need to get the patch, or whether that be to help third-party users and developers that make any mistakes while they're coming to learn how RenVM works and how RenBTC works. We can do that. And the second thing is that we can also make sure that as we expand to the phase 0, which is where it becomes semi-decentralized, becomes more like a large multi-sig or federated peg, and then finally in phase 1 becomes a fully unfederated peg and just a full decentralized system. It allows us to guide that step and get those people on board safely, so that as we're transitioning, if something goes wrong during that transition period, we can also react as well. So I think the trade-offs for us were, it was more important to be centralized and have the ability to react to any potential mistakes or bugs, and then to be fully decentralized from day 1.
Go ahead, just real quick, what's your opinion of what?
Bitcoin on DeFi.
Bitcoin and DeFi, yeah.
I mean, I think Bitcoin will persist as an interesting asset on DeFi. I think, I don't think it will overtake native assets. So I do foresee Bitcoin, obviously Bitcoin is on Ethereum today. I think we've almost got $1 billion worth of it, which is, I think, a huge milestone by any, for the market cap of any asset, puts it right up there. You know, I think top 50 or something like that. Then by the end of the year, we anticipate having RenBTC on other chains as well. So Polkadot being one of them, Binance Smart Chain being another. So I think Bitcoin will penetrate all of these different ecosystems. I'm not sure that it will replace the native assets on those systems specifically, but I think it will replace native assets in general. So if you look at, you know, Bitcoin across all of DeFi, across all of these different chains, I think you'll see more of it locked up than you'll see of native assets. And I think that's for two reasons. One is that a native asset's always safer. So, you know, ETH is always going to be safer. Even if you imagine the perfect interoperability protocol, Bitcoin Ethereum is always compounding two risks. It's compounding the Bitcoin risk with the Ethereum risk, and there's no way to get around those two things. Whereas Ethereum is only ever going to have Ethereum risk. So I think, you know, in that sense, ETH is more popular, or will remain more popular in general on the Ethereum chain. Also, there's, I guess, the social aspect to it. But then also, I think there's this, I guess the opposite effect is also in play, where I don't think Bitcoin is going to move to Ethereum unless it's going to be used there. So I think all of the ETH that you see on Ethereum has so many different purposes. If people just want to sit and hold ETH, then it's going to be sitting and holding on the Ethereum chain, obviously. But I don't think anyone's going to move RenBTC over to Ethereum just to hold it there. They're only going to move it there if they're interested in staking it or interested in using it as collateral or putting it into a liquidity pool. So all of the Bitcoin in DeFi, I think, is going to be very active. And I think there'll be a very small percentage of Bitcoin that sort of just sits there as float. Yeah, I think given the number of different DeFi projects and given the number of different chains that we will see Bitcoin on in the near future, I think overall Bitcoin will be one of the biggest assets that is used as collateral across the board.
Gilung. Chris, do you want to jump on the mic with your question? Or?
Yeah, I wasn't sure how much ground you guys covered yet. How's it going? Chris on the smart contract domain team. I've actually worked with you guys before, so you know who I am, but for everyone else. So I'm trying to recall at which phase the gray core sort of melts away and the RenVM is sort of collateralized by Ren, let's say the bonded Ren outweighing the amount of assets under custody that you have on RenVM.
Yeah, sure. So there's actually quite a lot to unpack there. So to answer your question directly, again, three phases: sub-0, 0, and 1. We're currently in sub-0. By the end of sub-0 is when the gray core will be instantiated, and that's kind of when we'll say that we're in phase 0. So the phases are not something that we sort of assert. There's something that's more reactive, where we look at how the system's evolving and we use it as kind of a label. So once the gray core is fully functional, we'll call that phase 0. And then once the gray core is melted away, we call that phase 1. So between phase 0 and phase 1, also during phase 0 is essentially when the gray core will be dissolved. And so part of the process of phase 0 will be implementing these economic, we're going to be implementing these economic drivers in the next couple of weeks. We're going to start that process. And then obviously if that doesn't work and we don't see the system react the way that we want, it gives us plenty of time and still enough safety to make any modifications that we might need, raising the fees, increasing the rebate, these kinds of levers that we can pull.
Right. So that you're actually almost anticipating where I was heading with it, which is that if we start custodying Ren BTC, which I think we would like to do to diversify our BTC exposure, I'm worried that will pull you guys further away from, because you're going to get more and more assets under custody that you have to hold under custody, and without the right sort of economic incentives to sort of balance that, I'm worried that we stick you in the sort of phase that you're stuck in right now, and it makes it harder for you to sort of move into gray core. And so I think it's great if you guys are working on the economic incentives in the coming weeks. We'll see how that plays out, and then that may end up solving that problem as well.
Yeah, agreed. And I think the important thing for us is that obviously we would love to see these assets in MakerDAO. We would love to see them with a small initial cap for that precise reason. And also just because we think it's, again, generally in line with our ethos of wanting to roll out slowly. It is important for us to get these integrations because it's one thing to run, to say, okay, there's a minting fee that raises slowly and then a burning fee that provides a rebate. And obviously if that rebate's large enough, I mean, to put it in perspective right now, based on how we're going to be implementing that, if you assume that a 24-bit rebate is enough for people, which we think it is, that's quite a huge rebate. RenVM would presently be able to drain all of the RenBTC out of the system, minus the amount of REN that it currently has. So it is currently, all the data that we're seeing is currently in line with our initial thinking, which is that we should be able to do this. And that's with the current minting fee. So one of the first steps we're looking at doing is raising that minting fee and just seeing what does that do. And with the long-term goal of having an algorithmic minting fee that self-adjusts based on the amount of demand that it's seeing. So, we're very confident that we'll be able to do that, but I think that confidence is only underwritten by seeing RenBTC in action. So obviously if there's the ability for RenBTC to be on something like MakerDAO where you can get DAI and you can go get crazy yields on that DAI, suddenly maybe a 24-bit rebate's not looking as good. So it's reasonably important for us to understand it's kind of a bit of a chicken and egg problem, which is why we'd love to see, even just a small cap in place so that it doesn't impact the MakerDAO system and it doesn't impact the RenVM system, because having, let's say, 5 or 10 million is well under the amount of REN that we presently have bonded.
Have you guys considered, while you're in these earlier phases, this would probably mitigate some of the concerns around risk, possibly insuring the BTC that you have under custody? I know WBTC has some insurance on their sort of multi-sig wallets against, effectively like somebody just draining those wallets. But have you thought about just sort of, going to the insurance market, finding something like that while you get to the sort of bonded?
Yeah, we definitely have, and it's something that we're actively investigating. But
okay, great.
That's obviously a process that moves very slowly. We're not entirely sure we stand on that, because within the next 6 months we would like to see it already in the phase where it's controlled by the Grey Core, and so that's a very short period to try and convince an insurer that they should be insuring something, especially a strange asset like this. I think with BitGo, it's a bit easier because they're obviously they're both licensed in many ways, but also as a central custodian, there's a model there that a risk model that the insurers understand. Unfortunately for us, the risk model is very difficult to communicate with any kind of insurance company that we've seen. We have considered things like Nexus Mutual, but we haven't dug too deep into that.
Does anyone have any last questions before we move to Uniswap? All right, I'll take the silence as a no. Thank you very much, Long, for waking up this
Thanks
early
for having
and
me, guys.
And joining us. And yeah, best of luck and success, and we'll see you around.
Thank you.
Good. Thanks, guys. Good day.
Hayden, are you guys ready to
here.
present?
Yeah, to be honest, we weren't necessarily planning on doing a presentation or presenting the project. We kind of heard that you guys had technical questions for us. And so, I feel like Uniswap is a pretty well-known project anyway. I would rather kind of just save everyone's time and scope it to questions you guys have for us.
Yeah, sure. I think that everyone knows Uniswap in here. And if they don't, they're probably in the wrong room. Does anyone have any questions, or should I start shooting? All right, I'll throw an icebreaker one. It's more on the business side, Hayden. I don't know how much you can share or comment on it, but I was wondering how you guys choose the pools you give rewards to when encouraging the liquidity mining.
Yeah, so moving forward, that's really just entirely up to governance, which our team sort of is not participating in beyond delegating to community members. And so it's really up to governance in terms of what pools get rewards. The sort of initial the initial rewards pools are mostly chosen for sort of the most popular, some of the most popular assets and sort of most desired. So, you know, like ETH to DAI, ETH to USDC, It was fairly neutral. And kind of the idea was to really leave it up to the community to decide long-term what gets rewarded and what doesn't.
Sounds good.
Hayden, what kind of attack vectors around governance are there? Like, could we see uni delegates voting to, you know, increase supply, or, you know, what types of things do you think that could we see from uni governance that would affect, let's say, our join adapter or the collateral in the system?
Yeah, so that's a good question. So definitely, you know, one of the main ideas of governance was to kind of have it be as sort of, you know, minimized as, you know, have as minimized governance as possible, in that, you know, there's not much that uni governance can do to mess with the core Uniswap protocol. It sort of owns the fee switch, and that's about it in terms of how it can, you know, interact with the core contracts for Uniswap v2. Then the other thing that it owns, and so it's just a fork of compound governance, and I know you guys have onboarded comp, and so in terms of what the governance structure looks like, it's very similar. The one thing that it does have governance over beyond the fee switch is it also has governance over sort of, there's this community treasury, which is, you know, 43% of the uni total supply is currently sort of vesting to the governance contract. And then governance has, and then basically you can have governance votes over, or the community can vote on sort of how that uni might be allocated, and then, you know, either through incentives or grants or anything of that sort in the future. In terms of, so the total supply is sort of fixed to 1 billion as the sort of starting point. And so this 1 billion vests over 4 years. It's front-loaded vesting. Some of this information is all in the announcement post, but if you want to kind of go back and, after 4 years, or I think it's on January, maybe Teo can confirm, or Moody can confirm, but I believe it's on January 1st, 2024. At that point, governance can mint up to, I believe it's 2 million uni per 2 million uni per year, or is it 2%? Let me see. Let me double check. But yeah, so governance.
Yeah, it's 20 million. It's 2%.
Yeah, it's 2%. So governance can mint up to 2% inflation per year, starting on January 1st, 2024. It's 2024, right? Just wanna.
Yep, that's correct.
All right, yeah. So starting on January 1st, 2024, governance can mint up to 2% inflation per year. If it doesn't, it doesn't carry over a balance of what it can mint. Like if it doesn't do it for a year, then it loses out on that 2 million or 2%. You know, of course, governance can always upgrade itself. It could burn the fee switch. It could, you know, release a new token and give the fee switch to that. Like governance has full control over sort of itself as a DAO, just like, you know, most DAOs do. But that's about it in terms of the scope of what can go wrong. You know, people could there could, let's say if someone was able to get, you know, enough votes, they could maybe vote to replace governance with a new system that has some other governance token or something like that. But you know, similar to kind of, you know, basically the exact same sort of surface area of attack you can imagine from Compound, to be honest.
Yeah, and so Compound has a governance delay, right? So their proposals take a little bit to.
Oh yeah. So we actually have longer. We have longer delays in Compound. So
okay, that's great.
Well, sorry, it's 7 days voting. So I think Compound had 3 days voting or 5 days voting, and then a 2-day delay for execution. Uniswap is 7 days for voting, and then 2 days for execution. There's no delay at the beginning. That sort of initial. So at the moment a vote starts, basically only tokens that have been delegated at the moment that vote has started can vote on that proposal. Similar to Compound, or exactly the same as Compound.
Okay, then I have a a question that might be too amateurish, but is governance responsible for the V3 as well, or just the V2? And what does the transition look like?
I would sort of, V3 is sort of this experimental research stuff we're working on right now. It doesn't really have any relation at the moment. So, yeah, I would sort of, at the moment, so governance is entirely governance over V2.
Okay. So when V3 comes out, then it's like almost if it was like a new project.
Well, it's, I'd say that it hasn't really been decided in terms of how V3 might be rolled out.
Okay.
Oh, one other thing, the only thing we did remove from compound governance, the only like major change, I think, other than adding the inflation, is we removed the Guardian thing that they had for a while. So compound had that sort of Guardian backdoor thing to governance temporarily, and Uniswap governance does not have that. So it is already kind of fully decentralized.
Do you have any other question, Chris, or maybe Frank or Sam? You're usually the most active.
Yeah, so digging deep, Hayden, into Uniswap and the future of Uniswap, are you guys going to do things like Maker, the Maker community does, or the Maker Foundation, I should say, although we hope to decentralize 100%. Are you guys going to do the same, decentralize by having different teams, risk team, debt team, etc.? Or is that something you guys are going to build, or is that in the game plan? Is there a foundation for the Uniswap?
I'd say that, we're very much kind of not pushing too strongly for any direction, and really kind of opening it up to what the community wants to be the direction of Uniswap governance. So, we're fairly hands off here, largely just delegating. We don't currently have a foundation. We've had, various community delegates come in, and, I guess the Dharma just submitted the first proposal this week, which is currently being voted on. But there's no, so something to note about Uniswap governance, it's a little bit different from Maker governance or compound governance. It's not really a structural thing, but a sort of like a risk thing, where Maker and compound both kind of have this idea of pooled risk, where you have this massive collateral pools that are sort of, if something goes wrong with governance, it can sort of negatively affect the collateral pools in a pretty serious way. And it's worth noting that, like with Uniswap governance, liquidity that is in Uniswap, nothing can really, there's nothing governance can do to kind of massively lose you money from as a liquidity provider. And so there is no like sort of like Oracle risk type thing or anything like that. So the sort of like risk team type thing, it wouldn't really be needed. It's more about kind of community, what the community wants to build on top of Uniswap, and sort of what it wants to incentivize and reward in terms of like ecosystem growth and all of that.
I guess you could raise the fees so much to scare away people and damage the project, right?
No, the only fee that for the V2 fee is hard coded to 0.05%. Governance only has the ability to turn that on and off. It doesn't have the ability to raise it above that or lower it below that. It's very, very, very scoped governance over in terms of how it relates to the trading pairs and all that. Technically, governance also owns all Uniswap's liquidity tokens, and will pretty shortly own the ENS name Uniswap.eth. So it has a few other things, assets it technically controls. The Uniswap Unisoc's liquidity tokens are actually worth a few $100,000, so maybe that's relevant.
Hey Hayden, so I was wondering, I get that you're not in like charge of what governance does, but is there any sense of like which liquidity tokens they're planning on extending rewards for, or even if they are planning to extend rewards?
No sense from me. It's it's going to be really up to the community. We have no sort of, yeah.
Sure, but as somebody who's not in the community, I haven't really been following. Does anybody know what the consensus is forming on that?
I mean, we've seen various kind of discussions in the governance forum. It seems like, you know, a lot of people are sort of happy with some of the initial ones we have, and, you know, there's been pushes for various tokens, like, you know, various popular tokens. People have said, oh, we really want incentives for, you know, stuff like YFI or whatever it is. And then we've also had people who kind of have advocated for sort of a more conservative, just mostly incentivizing the most important pairs, like the ones that are currently incentivized. So I could imagine something like that continuing, but it's really, one thing that I'll note is that we're quite early on in governance, and really people are just kind of just joining, and it's sort of in its formation stages in some ways. And so it is a little bit hard for me to kind of, I don't want to overly speculate on the kind of path that people will want to follow, or, you know, and I definitely don't want to sort of push people in any specific direction. So, you know, I'm being careful to kind of not speculate too much here.
Okay, cool. Thanks.
Does anyone else have any pressing questions? I'm trying to think, Chris, if we forgot something from the technical side, or some question that
Yeah, I
might
was
ask.
originally going to ask on the technical side, but then I just read the token while Hayden was answering those other questions, and it was that fast. So yeah, it looks pretty good.
Yeah, it's fairly simple and minimal in scope. So
Sounds good. Yeah. So I don't know, Hayden, if you have any. I know that you have a hard stop, another meeting coming up. So if you have any parting comments before we close the call.
I mean, you know, definitely a big fan of the Maker project. So cool to have you guys sort of doing a lot of the early work in decentralized governance and kind of, you know, so yeah, big fan. I don't know if I have any sort of other comments. Yeah.
Yeah,
Cool.
Thanks for the liquidity.
So thanks again for joining us, Hayden. Yeah, it was really nice having you. Next Wednesday, we'll have Crypto.com, the team from Crypto.com presenting their own collateral type and Eurostasis. They want to speak about a new ramp. So I'll see you all next Wednesday at 5 p.m. UTC. Thanks for joining and have a nice one.